Ben Sparham, welcome to the check-in.
How you doing?
I'm doing very well. How are you doing? More to the point.
Always good. All the better for speaking to you, Gavin.
Oh, so sweet. All right. Well, this is like a 20-minute video chit chat about,
hmm
about whatever the random questions throw up, generally speaking.
Yep, that's fine with me. I'm happy to talk about anything.
But let's kick things off with general chit chat about the market. I know you're a very busy market watcher. You're forever
hmm
making videos. I've dubbed you
hmm
before the busiest PI, the hardest working PI on eToro, and for good reason. So give us a general assessment of where you think we are at the moment with the market and the world economy.
Yeah, so it's been quite an interesting couple of months, basically. Obviously, markets this year, for the most part, and up until the last couple of weeks, have obviously had quite a strong rally, coming off of the lows from October of last year. And I think it was more kind of, I don't like using the word speculation, but there's a certain element of speculation and hope for it, right? Markets are quite forward-looking generally. So they have a habit of, yes, interest rates are going up and inflation's still high, but what's going to happen in 6 months' time? And that is kind of the expectation of where things are going to be. But I think the reality's kicked in a little bit more recently with labor market still being strong, things like this, inflation not falling as quickly as people had hoped for. And there's just been a little bit of a reality check coming over the last few weeks. So it's going to be interesting now to see, does that become the new prevailing trend as we head into, the back end of the first quarter? Or is this going to be just a little bit of a reality check, a little bit of a pullback, but then we get a continuation in that more recent bullish trend? So I think it's quite an interesting time in markets. I think you've got to keep your wits about you, but yeah, it's definitely interesting.
Yes, a very interesting time in the markets, Ben. You mentioned strong employment data. That seems to be kind of being revised backwards from the very sort of bullish data that came out a few weeks ago that was part of this whole, well, you call it speculation. Some people called it the flight to shite. I don't know if you heard that term.
Yeah.
Where some of the more speculative things were the ones that were rising the most. But the market generally was looking really strong and participants were very bullish.
Mm-hmm.
So what do you think about the way those are sort of being revised, seasonal adjustments and all the rest of it?
Yeah, I mean, sometimes it can be a little bit tricky to then really comprehend the data properly. I mean, same thing, I guess, when you look at the most recent CPI, right? It was adjusted. So it typically gets adjusted every couple of years anyway, in terms of the weightings that are in the readings. It's now going to be adjusted annually. And the first one of the new adjustment, which puts a little bit more weighting on, if I remember this correctly, don't kill me if I'm wrong here, but it was a little bit more weighting on like home markets and rent markets and things like this. So the weightings in the readings from, say, a year ago are obviously slightly different. So that causes a little bit of a, question mark over the data. And the same kind of thing, like you say, when we're revising, jobless numbers or whatever it may be, there's always going to be, because there's slight adjustments to things over time, how different measures are actually recorded. So there is an element of that you obviously have to take into consideration. I do think that generally speaking, people always try and be, for the most part, as optimistic as possible, right? Because at the end of the day, if they've purchased an asset, whether it's an individual stock, commodity, whatever, they are doing that with the hope of that going up, right? So they always try and find a positive spin on something. So people tend to try and find some kind of positivity in whatever the release is. So I think sometimes it's a case of people use it as a bit of an excuse. They're like, oh yeah, but it's been revised from this, or it's been revised from that, or whatever it may be. So I think there can be a little bit of a mixture to it, but I think sometimes you've always got to kind of look big picture, because one news release or one data release doesn't define a trend, right? And there's always going to be things that, even if we were just in a nice economic growth period and everything was expanding and looked lovely and rosy, along that trend line, it's not going to be linear. It will sometimes have some months when it dips slightly, right? It can't just perfectly go up. So it's the same is true when we're going the other way. So I think don't put too much weight on individual readings, but if we start to notice a bit of a trend or a momentum shift in any kind of data, then I think you really need to start paying attention.
I was painting my garden walls this weekend, listening to various podcasts, and one of them was going on about the Bureau of Labor Statistics and how they gather their data is chiefly through phoning up households and asking them questions. And I thought,
yeah,
Is this the 1950s or something?
A
That's not
lot
what
of
data
data,
means these days. I mean, data
but a lot
is
of it still is like that. I mean, if
that's
you look at, say,
amazing.
small business optimism, you look at, ISM data and that's things like that. A lot of that is still recorded by, mailing out companies, calling companies, very, like you say, old school ways of doing things. I mean, it is still seems quite strange to me personally, but I guess because it's the way they've always done it, whilst it may not be the perfect way, it is consistent throughout, if that makes sense, right? So if you suddenly change the methodology, you could find that, let's say they moved everything fully automated in some way, shape, or form. Well, then theoretically, they should also be then using a larger data set, right? Because it's a lot easier now to collect that data. But obviously, if you're then collecting a larger data set, well, then that could skew the type of numbers you're getting a little bit and it could offset things. So I suppose there is an element of needing to be consistent, but I definitely agree. It does seem very, very old school to do it that way.
Yeah, consistency is fine, but moving with the times is as well.
Yeah.
You talked about trend lines and how we're still on an upwards trend. I think from the October low, just about.
Mm-hmm.
Are
Yeah.
you watching very closely to see if that changes, and then you're going to be
Yeah, to a
turning
certain
bearish?
degree. To a
Yeah,
certain degree. I mean, I always like to keep. I'm a long only investor predominantly, right? It's very rare that I will ever execute short positions. So, in terms of balancing my portfolio, that's typically done more by diversifying between asset classes or holdings. So, for example, I have a bit of gold in the portfolio, right? Which gold is never going to be an asset that goes and makes you rich, but it can act as a fantastic hedge to limit some downside in certain market conditions, for example, right? So, I think when you take different things like that into consideration, I think you've just got to make sure that your portfolio is in a shape that you're comfortable with. So for me at the moment, I have some short-term bonds and some long-term bonds in there. Yes, bonds obviously have got a little bit of a question mark over them in terms of how the underlying bond's going to perform in current conditions. But I think with the yield being so attractive, that kind of makes up for any kind of fluctuation. And if we do end up continuing to have some tougher economic times, let's imagine that the Fed starts slowing down and the interest rate story becomes a little bit less of a concern for the bond market, but the economic growth doesn't really come straight back in, on that side, then of course bonds can become incredibly attractive, and then you've got the yield and the obviously the positive move on the underlying bond. So I think there's different ways of doing it. And at the end of the day, as long as your portfolio is structured in a way that you're comfortable with, that you understand the potential downside, we never know exactly what's going to happen, but you're structuring that in a way where you're happy with the kind of volatility the portfolio could have, which for me, I am happy with at the moment. The only way my portfolio would change at all is if I felt the story shifted to a more bullish, because I'm not overly bullish at the moment, right? So if I really shifted to a bullish bias, and let's say that in 6 months' time, imagine, right? I would then start to weigh my portfolio more heavily towards equities because I'm going to want to have more exposure there. That would be the only way I'd really shift my portfolio from where it currently is. I'm quite happy with the diversification I have in there and the weightings that I've got. And if we do have some more downside ahead, so be it. But I'm comfortable with what should be my realistic downside relative to an all equities portfolio, if that makes sense.
Makes total sense. What also makes sense is this is the check-in, and we're supposed to be dealing with randomized questions. So let's go over to our random question generator.
Let's do it.
And start the ball rolling. I also have to click stop.
It's like the lottery, isn't
it? Number 7.
There we go. Put it on the stand.
Number 7. Do you ever suffer from imposter syndrome as a popular investor?
I don't personally, but I'm just in life anyway quite an individual, independent person. I'm at times I've definitely been described as stubborn in the past. So I'm not somebody that will get influenced just because this person's doing this or this person's doing that or whatever it may be. I kind of sometimes to my benefit, sometimes obviously not. I tend to stick to my guns, and I'm quite kind of set in my ways. So that then kind of translates across. And yeah, of course, look, you'd like to have more copiers and stuff like that. But at the same time, there's some popular investors on there that have worked very hard to get in the position they are in. They've been on the platform a long time. Their results have done quite nicely, and it's justified, where they're at. So I don't look at it and think, that should be me, or this is where I want to be. I just think, look, keep doing what I'm doing. grow over time and stuff like that, attract the right individuals to copy me on the platform and build it over time. I've got my own path essentially, and I'm quite happy with that.
Okay. Next random question. 23.
I've got that one on my card here.
What's the most annoying question you get asked by copiers?
So I think sometimes the biggest issue that people have as copiers is that if they've seen somebody with certain results that they like, they then think that that's just going to be the case all the time, right? And so it's people thinking, is now the right time to invest? Should I wait? Should I do this? Should I do that? At the end of the day, that's a question that can only really be answered by yourself. And you've got to think, I'm putting my money somewhere that I'm happy with the results that have happened over time. I understand the potential upside, the potential downside, and that's then right or wrong for you. I think trying to ask somebody else, is now the right time to copy you? Should I do this? Should I do that? I can't answer that question for you, right? I don't know your personal wants, needs, financial position, whatever. So I think really and truly what people need to do before they do go copying anyone, the same as before you go and buy a stock or you invest on your own, right? Is you have to understand what you're doing, why you're doing it, and does that work for you? Asking me or any other popular investor if it is right for you is an impossible question for us to answer. So yeah, sometimes that can be a little bit frustrating because it's a case of, I can't answer that. But if somebody's new, I kind of get why they ask it. But I think, also if you're that early in your journey, you should be focusing on the learning side and not just trying to throw your money into market. So kind of goes hand in hand, I guess.
Shouldn't you just say, yes, of course it is. This is a wonderful time to copy me. Because past performance does guarantee future returns.
Of course it does. Yeah, exactly. Nothing but upside to the moon. Yeah, I mean, look, at the end of the day, I think you've just got to be honest with people, and it's a case of, I'm very honest with people. There's going to be plenty of people on the platform that in bullish markets will outperform me in terms of, pure, percentage return because of my style of investing. It's a little bit more diversified. It's quite value focused, right? I'm not in high growth names that typically explode during bull markets. But then what is typically going to be the case is you're not going to have as much volatility with somebody like myself as some of the more high growth focused individuals or crypto focused guys or whatever, or girls. So it's one of those where it's a case of I'm quite open about that. So I'm not just going to say, yeah, it's the best time to copy me. You're going to make loads of money and whatever. I think because if I do that, then in 6 months' time, it's not the reality isn't going to match what I've been saying at the beginning, and that's just going to reflect badly on me. So I'd rather be honest at the beginning, and then if you don't copy me, you don't copy me. It's not right for you, and that's fine.
That's a sort of similar message that I put out as well about myself. So, I think it's worth having one space in your PI team for someone who's of that approach. So if it's not going to be me, guys, I'm happy if you go with Ben.
Thank you very much, and vice versa.
All right, next question, 11. Market outlook for next 6 months?
I wouldn't be surprised if we're in a very similar, if you look at the indexes, for example, I wouldn't be surprised if we're in a very similar kind of price range to where we are today. Not to say it's going to go dead sideways, but what I'm getting at is in terms of, I don't think we're just going to break into a bullish or bearish trend from here and just kind of stay that way for the long term. Because even if we end up a little bit more bearish for the next couple of months, again, because markets are forward looking, if things go well over the next couple of months with data, they're then still going to be looking to the back end of the year and going, oh, okay, but this, maybe the Fed are going to start, actually pivoting and lowering rates or whatever. So I think prepare for a little bit of stagnation in markets. Maybe look for, if you're looking to try and chase a return, obviously it's not financial advice in any way, shape or form, but maybe look at some yield in the portfolio. And, if we do have a little bit of sideways action in the underlying asset valuations, and at least you're kind of generating a little bit of return there. But again, I think at the end of the day, you've always got to be looking long term, focus on building a portfolio that is comfortable for you, where, if it goes down a little bit, up a bit over the next 3 to 6 months, it doesn't really change your life or make any difference to you. So I think as long as you don't put too much pressure on a particular bias or outcome in the short term, then even if you are wrong or whatever ends up transpiring, it doesn't really matter too much. So I wouldn't be surprised if we have a little bit of sideways action in there. I've got a bit of yield in my portfolio, and I'll adjust accordingly, basically, depending on how things shape up.
31. Embarrassing. Have you ever seen a ghost?
No, I haven't, Gavin. I'd hope I'm not going to jinx myself now. I'm going to get haunted tonight. But no, I wasn't expecting that question either. So it's definitely randomly generated. But no, I haven't personally seen a ghost. Have you ever seen a ghost?
Well, of course not, because they don't exist.
There we go. Hopefully you haven't jinxed yourself. Hopefully you're right.
Number 20. What's
Hmm?
the one thing that everyone seems to like that you don't?
You mean generally or in markets?
I'm afraid that's the only question on the card. I can't clarify
It's like a spelling bee. Can you use it in a sentence, please? I mean, when it comes to markets, I mean, people seem to like chasing the next big thing, but 99% of the time, it's never going to be the next big thing, right? Everyone's trying to find the next Amazon, but the reality is how many companies have come and gone, and there's only one Amazon, for example, right? So I think so many times people are just trying to find that big one thing, that big one winner in their portfolio, despite the fact that there is literally books and books and studies that show all these individuals, you know, your Warren Buffett's, your Peter Lynch's, whoever your preference is as an investing legend, right? They've all said the same thing, that you've got to be paying sensible prices, getting good business. It's the same message across everything, right? Proven track record of a company. Yet you've got all these people out there trying to buy this company that's pre-revenue or pre-profit or whatever, saying, yeah, but you know, next year it's going to have this, and this is going to happen in 10 years. And it's going to be the next big thing. And I don't know, people just can't seem to drag themselves away from it. And for me, I would much rather go, yeah, but because I'm quite data-driven in what I do, I sit there and say, right, well, this company's done X, Y, Z. I can actually see that in the numbers, and I can now make sensible expectations and projections off the back of that. Why would I just pluck something randomly out of the air? Crypto's the same thing for me. I've got no problem with somebody having a bit of crypto in their portfolio, but you start making the majority of your holdings crypto and telling me, yeah, but this is going to happen, this is going to happen. It's pure speculation. Nobody knows what's going to happen in that market. So you're just making it up, and then you're justifying it to yourself by saying, oh, yeah, but this and this and this and this. So for me, I think, you know, that's something that always kind of just winds me up a little bit, because I sit there and think you're literally lying to yourself. So I think, yeah, something like that, you know, is one of probably falls into that bracket.
What about away from the markets? What's the one thing in life generally that people seem to like that you don't?
Social media, maybe. I've come off Instagram now, for example. I don't have Instagram. I don't have Facebook. I use YouTube, obviously, but that's purely for making videos and content for eToro. I do have Twitter, which I actually only joined in November or December of last year. Yeah. But I find that quite good for like news and things like that. And it's kind of helpful from an investing standpoint, right? Outside of that, I think, you know, excuse the French, but I think social media is just a piece of shit. It's just so bad for people's mental health and just life in general. People get these images in their head of what their life should be like, and they get depressed because it's not, but that person's just lying anyway and posting the highlights. And I think it's so bad for people, but yet people are obsessed with it, and they're just constantly on their phone, and everything they do in life, they have to be taking pictures. I mean, I saw a perfect example of it. You know, people may or may not obviously follow basketball, but LeBron James broke the record recently for total points scored in his NBA career and whatever. And there's a fantastic picture of the shot that he takes, which is like the history-making shot. There's the crowd behind him. There's only one person that hasn't got their phone like this.
Oh, I did.
And it's Phil Knight, the guy that obviously founded Nike. Everybody else is just sat like that. So all you're doing is you're just observing life through your phone. And you sit there and think you've literally sat there front row watching history, and you're watching it on the other side of your phone.
It's like if you go to live music and you're standing in the audience, and just everyone around you has a phone in front of them.
Yeah.
And you're like, incredibly annoying until a week after the gig when you want to relive it. And then thankfully there's loads of people on YouTube.
A few pictures or a few little videos or whatever, I can understand. But the amount of, like you say, Gig's probably a really good example. And they just stand there the whole time, and you're like, why? What are you doing? Just enjoy your life. Stop trying to take a picture of everything.
So you're not going to take social media advice from a PI that you interviewed recently, who's a big Instagram guy. He's always posing in his underpants and stuff, showing off.
Hugo?
Yes. Yeah.
No, like I say, it's not for me, Instagram. It is for some people. Don't get me wrong. Some people use it very wisely, right? You do get some people that use it from a business perspective. And outside of that, they're quite good at disconnecting, but that's not the case for most
I
people.
think
Most people are just consumers.
We're just old. It's for the kids.
Maybe there is that, although I am only 31 still, right, Gavin? So I'm still going to cling on to the fact that I'm not
you were
old.
much more mature. Okay, let's have one more random question. 35, which is the minimum age I would have thought you were. Okay. Investors often say they make many mistakes and learn from them.
Mm-hmm.
What was your most recent serious mistake, and what have you learned from
it? Well, obviously, there's a whole bunch of mistakes over the past. I suppose, if you're looking on a bit of a timeline type thing, not just the most recent one, I would say earlier on in my career, if you want to call it that, always focused on trying to generate faster profits. So trying to focus on very short term, despite the fact that, I had others around me telling me, not to do that and, trying to share their experience. But it was one of those stubborn moments of got to try and almost make the mistake for yourself. So I wish I hadn't wasted my time as much doing that and had listened to some advice. Then a little bit more recently than that, there's been times over the last couple of years I've been pretty good, but I'd say a couple of years back, I can't remember the exact details of it now, but I know I got a little bit concentrated at one point in my portfolio. And, you can have all the conviction in the world in an investment, but the reality is it doesn't mean you're going to be right. It doesn't mean the market's going to agree with you either. So, you've got to factor a few different things in. And I think sometimes just having, you want to have conviction in everything you hold, but there's a fine line between conviction and overconfidence. And I think making sure you keep that balance, which is something I've made the mistake of not doing in the past, making sure you keep that balance when you're then approaching everything. And you may, think you've got the best investment on the planet and you might have unbelievable conviction in it, but you've still got to position size correctly. You still got to make sure it's, not overpowering the rest of your portfolio and so on. And I think sometimes, where the mistake came from for me, you hear stories of, say, like Warren Buffett, for example, when he put over 50% of his portfolio or something like that in, American Express at one point and stuff like that. And you hear these stories and you think that's what you should do. But then you have to have the reality check of you're not Warren Buffett, right? So you're not going to be as good necessarily as he is, only one Warren Buffett, right? So I think, factoring all of that in and just making sure you balance that confidence level with overconfidence. And like I say, just making sure you keep all of that into account, because I've definitely made that mistake before.
Well, there you go. Words of wisdom from Ben Sparham, the hardest working PI on eToro. Check out his YouTube channel and website. Loads of good stuff there. Ben, always a pleasure.
Absolutely.
Thanks for joining us on the check-in.
Cheers, mate. Anytime.